business risk which the company is having, whether those business risks are properly managed by the governance. Governance, when I am saying, it may be the employees who are in charge of the activities, or the board of directors, or maybe the independent directors, or maybe the audit committee. So they are expecting that whether the internal auditors are really checking these business risks has been identified and those are operating effectively, and that has been managed appropriately by the persons who are conducting the business. That is 72%. They are believing that if you are reporting on that, that is the way in which you can actually help the management. The second they are talking about is assurance that the internal control framework is operating effectively. This is where there is a possibility for us to take a leverage for the next year audit report, internal financial control reporting. Because one of the role of the internal auditor is to see whether the internal control framework is operating effectively. I can say that there is an internal control. I can say that I have bought an expensive security system for my house which will identify that anybody who is breaching or anybody who is breaking, I will get a warning signal. But I forget to switch on the alarming system. So controls are there, but they are not operating effectively. What internal auditors function is that what is the control system, whether it is adequate, whether they are operating effectively. That is what 68% of the people are looking for. They are also looking for, internal audit is not a post-mortem job. Internal audit should think about what would be the happening for the industry in the next few years. So what could be the possible new business risks which will come and impact my business? For that, whether there is a sufficient system which is available with the management. If it is not available with the management, how internal auditor can actually help the management to grow that competency. That is 41% is expecting. Deduction fraud has come only to 30%. From 100% it has come only to 30%. Business performance, sharing knowledge of best practices, what I have seen in another industry, I will share that, it's 29%. Urgent issue tackling, 24%. But if you see this list, nobody has given anything relating to whether the accounts, whether the numbers, whether the books of accounts, whether the vouchers which the company is maintaining has been properly maintained, properly authorized. Nobody is worried about that because they believe that that is not their priority. Their priority is internal audit function should be a clear management advisor to me rather than to anything else. So I will just take a simple case study for this session, and then it can be moved on to the next speaker. We are taking a simple case study of WorldCom 1990. If you see that WorldCom, everybody knows that because one of the biggest accounting scam which has happened. And if you see, what has happened was the CEO and the CFO has advised to the accounting function and other departments to do some fraudulent accounting entries. And they themselves, that's what I said, they themselves sat past entries also without the knowledge of some of the people. And the internal audit team in 2002 March has complained that 400 million has been set aside based on the advice by the CFO so that this number can be used to show a higher profits, window dressing. But when they have asked questions about that 400, no information is coming in, but he has been prevented from pursuing further on this particular matter. If the internal auditor, who is a junior guy working under the CEO and the CFO, has stopped at that level, this accounting scam may not have come. What he has done was, he started digging, this head of audit internal audit has started digging this, and he has found out that 2 billion of unauthorized capital expenditures have been incurred, and those capital expenditures are not capital expenditure, they are revenue expenditure, but capitalized in the books of accounts. And finally, when this report came out, what has happened was $3.8 billion of adjustments in the financials reported profits. Internal audit has not yielded to the pressure, and they have acted independently to prevent that. And the biggest point is the whistleblower mechanism has also worked. Cynthia Cooper, that lady, the internal audit head, has appeared in the Time magazine. And because Time magazine, when you are appearing, that's itself is the biggest honor. And they said as one of the persons of the year of 2002. So a simple internal auditor can become a whistleblower to protect the interest of so many stakeholders from a mismanagement. And similarly, he can also give advice to the management how it can be run very effectively. And again, we are talking about various corporate governance related matters. If you see, even though they are talking about in the study about corporate governance, if you really see, on the 77% of the respondents believe internal auditors' responsibilities extend beyond internal control assessment and includes areas such as risk management and process improvements. So this is what the expectation. 77% of the respondents are believing that. So I will stop at this level. These questions can be combined with my second session, because there could be some questions which you will be asking, for which I will be having my own answers, how it will be effectively done in the new scenario. And thank you very much for the patient hearing for the first half, and I expect the similar thing for the second half also. Thank you so much. Friends like Kolkata, where the friendship is very great, the food is also very great. So I know what would be the impact of the food on this session. So I am setting some ground rules for this afternoon session. The first thing is, if you have mobile phones, please switch off. Don't have that mobile phone in ringing tone, for a simple reason: it will disturb the sleep of the person sitting next to you. The second ground rule is, don't put it in vibration mode and keep it in your pocket. It will disturb your own sleep. So accordingly, it's better to switch off. So we discussed in the morning about what is happening in internal audit side and how this can be an effective management tool for the benefit of all the stakeholders. Whether we are talking about it's the shareholders or the management or the external auditors or the regulators, we said that internal audit will really be a tool for the purposes of management control, and it can be leveraged upon. And we also discussed in the morning that the principles of internal audit, or the way in which internal audit has been conducted, has also underwent a lot of changes. And in the process, we are moving on from one style of internal audit to another style of internal audit. So this session, what I am trying to do is, what is the evolution of internal audit over a period of time, and what is presently being done, and what is actually being expected by the management to really make the internal audit as an effective tool for them. So very simple agenda. What is the changing definition of internal audit and how it is being conducted? It's a very, very simple agenda, nothing to worry too much, no complexity, no jargons, nothing. A perfect setting for the afternoon session. But at the same time, I have to also tell you certain areas where some developments are happening, and that developments, how it is actually considered as a total change in the way in which internal audit function is being done. So for example, if you are looking into this chart, I'm starting with what was a traditional internal audit was, where we were not having big competition because everybody is concentrating on tax audit, everybody is concentrating on tax practice, audit practice a little bit, but nobody was bothered on internal audit. So there is low competition as far as the internal audit is concerned. And accordingly, the entire focus or entire orientation is based on what is the customer is requiring. So that's the focus. And if you see the green was talking about what has been addressed in the process. When I am doing a traditional customer oriented internal audit, what was addressed is that it was more on the financial accounts focus. So if somebody is preparing a financial statement, somebody has presented books of accounts, you are trying to find out whether the entries have been properly passed, whether the vouchers have been properly approved, whether the postings at that point of time, it's manual books are also, whether the postings have been properly done. So all those things are normally being done. If you wanted to be an internal auditor, you should know what is vouching. You should know what is to check from one number with the base document with what is recorded in the account books. Interestingly, the business understanding, client's business understanding was not given so much of significance. Even if with limited business understanding of the client, he can go and do an audit. For example, I can do an internal audit of a trading company, and I can also go and do an internal audit of a retail company without much difference. Because in my view, as an internal auditor in a traditional style, I always believe that trading is a sales transaction. It may be a retail transaction or it may be a wholesale transaction, but sales is a sale, and it requires only a purchase order from the customer, and I should have raised an invoice, and the invoice should have been properly accounted for, goods have been moved, and there is an evidence that the goods has been moved. So there ends the way in which my business understanding is required. Very, very limited business understanding at that point of time. And what we have used is routine skill sets of people. So for example, many of the times when you are sending a person for doing an internal audit, I still remember that when I joined my articles in 1987, the first assignment which has been given to me was to form part of an internal audit team. I'm saying forming part of an internal audit team, not went and did the internal audit on my own. So we went, petty cash, purchase day book, sales day book. So one person was checking sales, another person was checking purchases, and I am being the junior most, has been given petty cash. So I'm not sure how many of you have seen, maybe some of my colleagues here will vouch for me. When we are talking about petty cash book at that point of time, we called as columnar petty cash book. The book itself will be like this. So one column is receipt, and then narration, then what is the total amount of the voucher, and what is the various expenditure which has been incurred in that particular voucher. Maybe a person might have gone on a local conveyance and he might have incurred some meals expenses. So meals will go to staff welfare, local conveyance will go to conveyance expenses. He must have purchased certain items, it will go to printing and stationery. Like that, each voucher will be segregated into various columnar and it will be doing. So if I have to do an audit, I should start the audit here and end the ticking here. And believe me or not, 1 month petty cash vouchers will be at least 2,000 vouchers. And I have to complete the petty cash within 15 days. What would be the effective internal audit I might have done? I was literally seeing the voucher, ticking everything, and one of my senior came in the evening and said, how many vouchers you have seen? I said, maybe around 100 vouchers I have seen. 100 vouchers per month is around 5,000 vouchers here. You are doing only 100 vouchers. When you are going to complete? I will teach you something else, how you can actually do. He has taken the petty cash vouchers. There is a separate color ink pen which we normally use, some tick we will use. Tick, 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 all the vouchers. 5,000 vouchers have been ticked. Then took the book, all receipts this side ticked, all this has been ticked. 1 month voucher is over. That's the way in which the internal audit function has been performed at that point of time, because we felt that there is no domain expertise required or skill sets is required, and it's a transaction based audit. Nothing great which we are talking at that point of time. What was not addressed? This is what addressed. What was not addressed at that point of time is that what is the operational aspects of a company. For example, when I am doing an audit of petty cash, I am only worried about whether the amount has been supported by a voucher rather than whether that expenditure is really meant for the business of the company or somebody has actually spent this money unauthorizedly. That is not my domain. Why he has incurred an auto expenditure may be my question, rather than asking by paying this auto expenditure whether he is saved half a days of job. So the operational area focus is not there. In fact, one of my, when a discussion has happened with a client team on this, a person at that point of time, auto it's in a very expensive mode, 1987. So I was asking, everybody is using buses, but only this person always claims auto expenditure. But I have seen him one day that he was actually going in a cycle. So I think he is doing a fraud. Then he said, Ganesan, see only one aspect. This man is actually going to my bank account, my banker. And he is ensuring that all the checks which is coming for clearing is being passed. If I am saying that you cannot go in auto, or you are using your own cycle, and better go in a car, in a bus, and you should not claim any meals expenses, because he claims the meals expenses. What will happen? He will go to the banker, see some 2-3 checks whether it has come or not up to 11 o'clock, and then because after 11 o'clock he takes another bus to come to my house, to come to my office to take his lunch. So he will do only a portion of the job, saying that this is the time which is available, whereas when I am allowing him to claim an expenditure which he is not actually spent, what is happening is he is ensuring that all the checks has been passed and he comes back. So in the process, I am actually not wasting one more day of his salary, but indirectly I am saving something. In other words, the operational aspects of what is the expenditure incurred, why it is incurred, whether there is a logic, that concept was not actually applied in the first phase. When there is a transition from the traditional side to something better than that, what we are looking for is, it's a competitive market. So everybody has felt that we can also do some internal audit because it's monthly fixed income is coming up. So what is addressed at that point of time is that people are moving from a postmortem job or the transaction based audit to what they are trying to say, what is the process and regulatory compliance. So what is expected? Anyway, a transaction has been recorded and that has been verified by an accountant, and finally statutory auditor is also looking for, and the financial statements have been tallied and opinion has been obtained from the auditor. So somebody is already doing some activity. Whether my entire internal audit work should be relating to only the transaction based audit. What is the other comparative work I can actually give? What the value add which I can provide to the management? People felt that one area where people are not concentrating in whether all the laws and regulations relating to this company has been complied with. If it is not complied with, what could be the possible penalty? And if there are instances of non-compliances, how it can be arrested going forward. and how the penalties and other consequences can be saved. One is on the regulatory matters, the concentration has moved on. The second important area is people started having more of the business knowledge and tried to identify what is called a process-related improvements. Two simple examples we can see. If you do an audit of a manufacturing company, you might have seen that they will list out what are all the laws and regulations and whether the company has followed that or not. Even now, that is being done. The second aspect, if you are seeing a manufacturing company, one comment will normally come about overtime payment. Why the company is paying overtime wages? It should have avoided overtime wages, because they believe that this work can be performed within the normal time, but the employees have not performed the normal work and the extended period, and because of that they got overtime, which is more than, it's twice of the normal wages. Whether the process of identifying, it may be a generic comment, but when I am doing a process related activity or process related improvements, I am just trying to find out whether there is really a need for overtime and how the process has been monitored. If the monitoring mechanism is already there and it says that the overtime, whatever is been allowed, has been properly checked by somebody and there could not be any misuse of the activity, in that case I will not worry about whether the company is paying overtime or not. So my concentration is basically on the root cause analysis rather than what has happened based on that particular scenario. If I find that there is an issue on the fundamental principle and there could be a control lapses, how I can suggest for an improvement on the process so that it can be made a foolproof system. So this is more of a process oriented audit approach which has started, and it has also gone to the next extent. But at the same time, what has happened was, there's one more thing which has happened also is that instead of I am doing 100% verification, 5,000 petty cash vouchers, I am not bothered about 5,000 petty cash vouchers. Out of the entire 12 months, 5,000 into 12, 60,000 vouchers, I do a sampling technique by which I select certain things and check whether the controls relating to petty cash payments have been properly done or not. More of control testing rather than on transaction testing. So when the sample basis of verification is happening, the coverage is more and the audit is not just a tick box approach, but it is really a value add to the end user. That's the thing which has happened. But at the same time, certain things not addressed even in this approach is that the transactions are becoming more and more complex. And business environment is also more and more complex. So initially I don't have a worry about what is the understanding about my business, but now I started having an understanding of the business, but the complexities relating to the business is not fully addressed even at that point of time. See, what is the modern or maybe present scenario, what is happening is that people are calling a low tolerance. In some companies they are saying we have a zero tolerance policy. What do you mean by low tolerance? They say that we fixed a control environment. We fixed a standard operating procedure for each and every activity. If there is a violation of the standard operating policy, whether that violation or the exception has been properly approved, we have an approval mechanism. We call it as a compensating control or overriding control. That is also being done. If there is a bypass of that controls, then we are not going to accept any tolerance on that particular aspect. So people are going for a zero tolerance or low tolerance on the activity. What was started happening is people or the internal auditor not only checks the process and what is the exceptions arising out of the process. But the internal auditor started designing the process or designing the control environment and started checking the adequacy of the design and their operating effectiveness. So maybe I can say that previously, what is the policy for payment of overtime wages is what we have asked, rather than based on the vast experience which the company, the auditor, internal auditor has obtained by doing the audit in various industries, the best practices, based on the best practices, he has helped the company in deciding what should be the standard operating procedures. That's what we are saying. The process design itself, the auditor was helping the company, and wherever improvement is required in the process design which was already there, he is helping them, and also checks on the control aspects. And the second important point was all the audit process, internal audit process, are linked with the business matters. It is not simply the auditor what he wanted to check. For example, you might be knowing that nowadays one of the directive for audit committee is that the scope of internal audit has been defined. And the second one is the scope has been defined, whether it has been agreed with the statutory auditors. Because the statutory auditor, at the end of all the audit has been done by the internal auditor, should not come and make a comment that the company has an internal audit system, but that is not commensurate with the size and nature of its business, then there is no use on that. So both on the compliance side as well as for contributing to the management, what is being done is that the internal audit scope is aligned to the business of the entity. In other words, the internal auditor is expected to be an complete understanding, to have a complete understanding of the entity's business. And the audits are not done through a manual vouching or samples has been selected and somebody is checking, but the audit is done through automated tools. Will you believe that some of the internal audits are not done sitting at the field, but sitting at the corporate office, having an access to an user system and putting a sample data into the system and seeing whether the sample data is approved based on the standard operating procedure. That is what we are started saying information systems audit or computer aided audit techniques. So these type of information assessment or more of automated tools is being used by the internal auditors. That's the next level. But what was actually missed out even in that scenario is, what is the business objective of the company and what is their strategy? What is the performance improvement which can be done, whether it is fully addressed, not fully addressed, there is scope for further improvement even in that particular area. Now, we have seen traditional, transitional period, modern. What is going to be futuristic? So, we always know that expectations are always very high. And even if you see, as I have told you in one of the scenarios, the audit committee chairman was asking, can you sign that the transactions with related parties are at arm's length? The expectations from the internal auditor is also increasing. And accordingly, we cannot think that this is the way in which the internal audit framework will stop. What I am thinking, how the internal audit will go at the next level is, the internal auditor will analyze the business strategies and he will enable the business strategies being aligned to the risk assessment, and for the risk assessment what should be the various controls to be in place and how the controls are being operative. So that's the way in which the directions will go. Full and full of process audit rather than on your compliance related activity. Compliance related activity will be done by a compliance officer of that company. Internal auditor may not be expected to check on the compliance aspects. So, in simple terms, the expectations are increasing for a simple reason. Management is responsible for the risk assessment relating to the business of the entity. So accordingly, wherever there is a risk on the management, they are looking for somebody on which the risk can be actually passed on. When we are talking about a post-lunch session, sometimes it should be a little bit making you to be aligned with the slides as well as aligned to the objectives of this session. And wherever I believe that a little bit of disturbance is happening, concentration is getting diverted, let us bring the attention in a different manner. Maybe you will see a lot of anecdotes are coming in the entire presentation. That's what I am trying to warn you. When we are talking about the risk management approach or finding out somebody to solve the issue, I was just recollecting one situation. A hotel like this, an husband and wife came, checked in, and they have been allotted a room in the 3rd floor. Up to morning there is no problem. In the afternoon there was a call coming to the reception, and the husband was saying in a hurried voice, saying that there was a big argument between me and my wife is actually making me having fear that, and she says that she will jump out of the window from this 3rd floor. I am worried, and please come immediately because you have to solve this issue. So the receptionist has said, the poor receptionist, sir, if there are any maintenance issue, we can attend to that. It's after all, it's a family issue. How we can actually come and help you out? Please resolve on your own. No. If it is a family issue, I might have actually solved it. It's really a maintenance issue. She is saying that she will jump out of the 3rd floor window, but the window is not opening. So sometimes when we are looking for somebody to help us in solving the issue, we are falling back on the third party. Similarly, when there is a responsibility of risk assessment and managing the risk on the management is looking for an outside agency, which is naturally the internal auditor. So what is happening is the maintenance of internal controls designed to ensure accuracy of the financial statement and other disclosures. So let me see this aspect with respect to a new development which has happened in the Companies Act 2013. We are saying that for 31st March 2015, the director's report should contain a declaration that the internal financial controls are adequately existing and they are operating effectively. When I am saying operating effectively, it is operating effectively throughout the period. So on 31st March is already over, it's almost 3 months now. And management, whether they have really identified the internal financial controls are existing or not, they may not be knowing. From where they can actually take the help? One aspect is the internal audit function in many companies are based on the control framework, or the effectiveness of those controls is what they are checking. There could be a possible leverage which people can take on the internal controls for making one compliance on internal financial controls related matters also. And another reason why the expectations are increasing is the increased accountability of the management, especially the personal liability of the CEO and the CFO for financial statements. So if the financial statement is not prepared, the CEO and the CFO is actually making a statement saying that they are verified the statement and it is aligned with the books of accounts and there is no misstatement. They are actually giving this CFO and CEO certification as part of the corporate governance. So to that extent, the accountability of the CEO and the CFO is increasing, and again the fallback will be on the internal auditors to help them out. So we have seen that what is the effective control management which we are talking about, which is better that a company will have, is that when we are talking effective management controls or effective control environment, is a complete control system, and if there is a bypass happening in one particular control, and there should be some other control which will be operating at a higher level. I give a simple example, very, very simple, basic example to give you one of the activities. I am talking about an internal control in a small textile showroom, very small textile showroom. We were talking about the internal control framework, which this internal control we will align with the business risk. What is the business risk for a retail showroom? First biggest risk is somebody is coming, taking the material without paying for it, pilferage. Very easy possibility. With so many CCTVs put in place, it is always possible that people are experts in still overdoing that activity. So how it is possible? Some small, you can just imagine when you are going to a textile showroom, whatever I am going to narrate is happening, but you will, if you are relating that to what the actual control framework which they are talking about, then you will realize knowingly or unknowingly we are worried about control environment, we are strengthening the control environment. You are going to purchase one branded item. As soon as you have entered, there will be a person who is welcoming you, and he will ask, sir, what you are looking for? You will say, I am looking for a branded shirt to be purchased. Immediately he will tell, go to the 4th floor. He is not allowing you to wander all around unauthorizedly, so that you have the access to items where it may be vulnerable. So he is directing to a particular floor. You went there, you selected your piece, there will be a counter person, the piece has been selected. As soon as you have selected the piece, you are ready to take it to the billing counter, but he politely offers you, sir, don't worry sir, my boy will take it to the billing counter. It is not a politeness, it is an internal control that you are not allowed to take it out without being billed, and I am controlling the entire process of it is going to the billing counter. So the boy takes it to the billing counter, it is billed. As soon as bill has been made, it is not straight away handed over to you, it is actually pushed to the next counter. Somebody is verifying the bill, whether you have actually billed, that person has actually billed the correct item or a different item. So a maker-checker control even for the billing is happening, and after that the cash is collected by a person sitting next, and after the cash has been collected, he puts a seal on a copy of the bill, and the bill has been handed over to you, but not the material. And the material normally delivered at the ground floor near to the outside entrance. So that means as soon as you collected that from the counter, you have to walk out of the premises. So the entire process is controlled. Now I wanted to have a small deviation because I wanted to have a convenience of purchase. I do not wanted to purchase everything and getting everything delivered at a particular floor. So now companies are saying you can buy and take the delivery at the same floor by paying the cash or by credit card at the same floor. So what is the possibility? I take this particular branded shirt, billed it, paid the cash, delivery has been taken in the same counter. And I am taking delivery, again it is prone that I can move from the 4th floor to the 3rd floor, 2nd floor, put some more items into that basket and go out. Possible? What they are doing, this is what I was talking about. When we are talking about a control environment, we are talking about the controls. If one control is failing, what is the one control which is failing? I am ensuring that a person after making the payment, it collects only when he is going out, I'm ensuring that physical movement of the goods. But I'm bypassing this control by giving a convenience to my buyer that you can collect the material at the same floor. That should be overriding control. This control has been bypassed. There should be a compensating control for that. What companies are doing, or what the showroom is doing, they use a small plastic tag by which the cover which they are handing over is fully sealed. So that means if you are opened this, that fellow will stop you at the entrance. When you are carrying this is only for this floor. You cannot take anything inside. Exactly the internal audit is also looking. I'm just giving a very, very fundamental example. If you are going to an organization where there is a transactions are complex, we are looking for what type of control which we are expecting to operate. If the control has been bypassed, that's what we are saying. If there is an exception, is there any compensating control which is operating at the same level or at a higher level? For example, even if I am saying that no, this type of tagging is not happening, it's a compensating control. At the same level, it is not happening. So when it comes down, when I am taking the material down to that, wherever I am going, for example, if I am taking this material to the next floor, the bag, whether somebody is asking me to keep this bag at the entrance and then go and make the purchases for the floor, take that delivery also and making the movement, maybe at a higher level. So just for understanding, I am taking a simple example, but if you take this same example in a very complex business environment, for example, I am taking to a very, very complex scenario. A company is having biggest issue with respect to foreign currency transactions. So Treasury Department has to be involved. Normally, we will not audit the Treasury Department because because we don't understand what is happening in the Treasury Department. If I have to do the audit, because the expectation is you do the audit of the Treasury Department also. Who is making the decision to take forward contract to hedge the forex transaction? And what is the price at which he is buying the forwards? And who is approving it? And in case, based on the past performance, I have a loss in a forward transaction, who is reviewing that resulting forward losses? And whether there is any explanation which has been taken from the Treasury Department why this has happened, even though the expectation is to mitigate the losses, forex losses. So if I am taking a simple example of who is authorizing to enter the forward contract is who is billing and who is collecting. And I am saying that somebody is reviewing whether the forward contract are making a losses or profit. That is what I am talking about, tagging it a small with a small plastic tag, not allowing you to do something more than that. Even if something is happening, I am trying to find out by means of business review at a higher level why decisions went wrong. What is the alternative which we should do for the next transaction is what we are talking about. Controls operating at a higher level to monitor wherever there is an exception which is coming in. So this is what we are looking for as a control environment. But there could be a lot of possible challenges in a control environment. One could be management for project funding and oversight, whether that is really oversight is happening. Effectiveness and efficiency of the operations, whether that has been properly monitored. Processes and control framework, whether they have been fully defined or it's only in theory. Whether resources are available and they have been fully utilized for ensuring the actual operations of this process. This legal and regulatory compliances are inbuilt in the control system itself, so that as business as usual, that is also being taken care. No special attention is required only for compliance framework, but that is happening as usual by setting that into that. What would be the impact if I am able to meet the challenges? I have to ensure that capacity building has been properly done and technology adoption wherever it's required we have to do. And if I have assessed what is the cost, effectiveness and efficiencies in operation, I can end up with having efficiency or reduction in my cost or maybe we can talk about cost optimization. We can also restrict the leakages of revenue. When we are talking about optimum resources and whether they have been fully utilized and proper monitoring is there, naturally the overriding of controls can be excluded. So I can control on somebody bypassing the standard operating procedure, that is also possible. And when we are having these challenges and the implications, what we are trying to focus is more on the business environment of the client rather than on a normal scenario. So basically, we are trying to eliminate the gaps and inefficiencies in the business operations as well as the controls. So operation is mapped with the controls, and those controls, wherever it is required, whether there is a compensating control or a higher level of controls, to ensure that exceptions are properly reviewed and resolved at each point of time. Then, wherever management has some concerns, whether this has been talked with the audit committee and board of directors, and their expectations is also aligned to this business environment goals. That is another expectation. This is the reason why we are saying that whenever we are talking about internal audit, the scope of internal audit is discussed, agreed by the audit committee, and it is going. For a listed company, audit committee has to approve the scope of audit, internal audit also. And then we are also seeing what is the risk environment in the current business scenario. For example, if we are talking about something happening in the market, what would be the immediate effect on the business of the entity? For example, you might have seen today's paper. ITC was pushing its noodle EP because market change happening was there is an issue with another brand. So I am positioning in a different scenario, and I am trying to build my entire operational strategy based on what is happening in the market or the business environment, current business environment, where I am positioning myself as it's safe, nothing is added. That's the way in which we are going for an aggressive. Similarly, whether the strategy, if there is something is happening in the market framework, for example, in automotive industries, in one particular point of time, the recession has happened, the focus is more on inventory management. So the internal auditors have aligned all their strategy into what we called previously ABC analysis of inventory, or minimum level, the reorder level concept of inventory, moved on to a concept called just-in-time inventory. So the inventory related risk has been pushed on to the component manufacturer, but not to the ultimate user of the component who manufactures the end product. So like this, connecting the business strategies with the business environment to ensure that we have a complete efficient control environment to achieve the business objectives of the entity. So this is the complete role of how the internal auditor can move from the traditional way of looking for a transaction audit, but to look at helping the company on business environment. Okay, let's sorry, let's just look at one aspect, how the internal auditor can help in building the right line of defense. So if at all a company is talking about, I am building a right line of defense for achieving my business objectives and ensuring that a perfect environment in which my business is being operating. And even if there are some problems arising it, I will be having a business succession plan. The first line of defense which is expected is that business operations is the first line, because I am doing the business as the owner of the business, and I should be knowing what I am doing in that. So for that, they will establish policies and procedures, including the internal control aspects relating to that. Again, the role of the internal auditor comes here also. The internal auditor will help the company in setting up the policies, which we call it as a standard operating procedures, and he will also help them in setting up the internal controls. That's what we are saying, control environment. The first line of defense also, internal auditor can very well help the management. The second is oversight function. So I set the policy. I said this is the way in which the business has to be done for each of the processes. Whether it is being really done according to that standard policy or something else is going on. So, for example, if you are taking a loan from a bank, or you are taking a credit card from a credit card agency, they will say that you need not pay anything. So membership is free. You can use this card. But you will be asked to sign off a 4-page document. And that 4-page document will contain so many terms and conditions, but what we are signing, he will put an into mark on the last column. So agree with the terms and conditions. You are signing that. When you are signing this, have you read this or anything which be going against the expectations what you are doing at the time of signing the credit card? We don't know. Only after they come across and they say that you have used a revolving credit facility. Because of that, you don't have a credit facility at all. So, for example, if I have purchased for 10,000 rupees, they said that even if you are paying 5% of the total amount outstanding, that is enough. So, I have, what is the 5% of 10,000 rupees? 500 rupees. I paid that, and I am entitled for 42 days credit terms normally, which is the next payment cycle. But the moment you are using that revolving credit facility from the next month onwards, even if you are buying for 1,000 rupees, you start paying interest on that 1,000 rupees from the day one. That is there in the part of your terms and conditions, but we don't know because we signed simply. So similarly, if we are talking about there is terms and conditions, there is policies and procedures which has to be adopted, whether that is being adopted or not, there is a monitoring process which is being done. And the third is, here also this is a second level of checking also the internal auditor can function. And the third line of defense for the management is internal audit. Company can set up their own internal audit department in the first and second phase, but if they wanted to have a third line of defense, they can actually think about an independent internal audit, which will have a complete understanding of the business, policies, procedures, process-related matters, and give an assurance of the adherence to the policies, etc. In other words, this will result in meeting all the expectations of the external shareholders. When we are talking about meeting the expectation of all the shareholders, one area where the way the internal audit is moving on is that it is trying to identify what is the risk related to the business of the client, and based on that risk, how the audit should be linked. Or otherwise, to put it in simple terms, a risk-based internal audit is what people are expecting rather than doing a simple internal audit. So what we are doing, we see what is the business understanding of the client. We understand, go and check what is the business of the client, and we compare that with the industry, and we have an analysis of the industry also. Then what is the key business drivers and what is the key risks relating to this in a particular industry, and the focus will be to identify those major risks and how the major risk can be addressed, what is the standard set of procedures and policies, control environment in that particular area. Because we use the word, whenever we are talking about the risk-based internal audit, risk assessment is based on two aspects. One is, what is the magnitude of the exception? What is the likelihood of the exception? What do you mean by likelihood of the exception? On 365 days, if I am talking about the transactions are happening on a daily basis, maybe 1 or 2 cases, likelihood is remote, maybe very, very small. then I will not worry about it. But at the same time, if I am only looking at the likelihood of an exception happening without seeing what is the magnitude of that exception. For example, all the journal entries has to be approved by a person other than the person who has originated. And if it is more than a lakh of rupees, it should be approved by the finance manager. And if it is more than 5 lakh rupees, it should be approved by the CFO. And if it is more than anything else, or it should be approved by the managing director, assuming that this is a system. There is only one exception. Only one exception throughout the year. So when we are talking about the risk, we are analyzing what is the likelihood of the occurrence. Only one case has been occurred. If I am only saying that only one of instance, nothing to worry, without seeing what is the magnitude. This one entry is to make an adjustment of 10 crore rupees. Magnitude has also plays a role. You should see what is the likelihood and also what is the magnitude of those issues. In some cases, magnitude could be smaller amount, but the number of exceptions which you are seeing is very high. That's where the concept of internal audit will move on to the next level, what we call it as a forensic audit. In internal audit, you might be seeing that when I am checking one item and finding an error, we call it as an exception. When I am checking a similar item and finding another exception, then I am saying that it seems to be a trend. Instead of saying exception, I am saying it seems to be a trend. Assuming that there is one more exception of the similar nature comes in, I confirm there is a trend. Whenever I confirm that there is a trend of exception, it could be a possible intentional error or fraud. So we will go into what we call it as an investigation. That investigation nowadays we call it as a forensic audit. So internal audit, we will move on to even the forensic audit depending upon what is the level of exceptions which is tolerable to the management and what is the areas where the likelihood and magnitude of the errors are tolerable to the management. So after we have identified the risk and the level of tolerance, based on this, the entire internal audit procedures and the process related activities, how we are auditing has been defined, and the controls or whatever has been done. So what will they do? They go by a top-down approach. If I have identified, say for example, 10 critical risk area, out of the 10, what is the topmost risk which will have the highest magnitude and high likelihood of recurrence? And because of that, it will directly have an implications on the bottom line or the top line, or resources being unauthorizedly utilized by somebody else, whatever may be. I will make a top-down approach, and the audit will be based on the highest level of risk. And at the same time, when I am doing a top-down approach, I normally make an error of concentrating only on the top items. And you know, now people are very smart. In fact, you might be knowing that there is a standards on auditing called SA 240, which is talking about auditors' assessment of risk, assessment of fraud risk matters in doing an audit of a financial statement. That standard says that many a times, the person sitting opposite to you, you are the auditor, assuming that you are the auditor, and the person sitting opposite to you as a CFO, equally a professional. You should not forget about that. He may also be a chartered accountant. He might be well experienced than you, and some of them, interestingly, could be alumni of your own organization. So for example, if I am saying that I am from one accounting firm, BSR, and one of my ex-staff who has been did articles or maybe worked with me for 2 to 3 years, with that tag he might have went to the industry and he may be sitting as a CFO. And when I am doing the audit of the same entity, he knows better than me what is my sampling technique, which type of samples I will select, how I will do a top-down approach. Once he knows that these are all the items, and assuming that he is an unscrupulous person, he wanted to commit some mischievous adjustment in the financial statement, he will cautiously avoid the areas where these adjustments could be checked by the auditors. He will do all these things at an area where the auditor will never look into. So one of the standards on auditing also says that when you have decided your audit strategy, it has to be discussed with the client. That is also, it says, one of the auditing standard. I cannot go and, it says talk about the strategy, but it's not talking about your audit procedures. Naturally, there is a concept called building in unpredictability element in your audit procedure. I bring in unpredictability. What is the unpredictability in a risk-based internal audit? He will believe that I will only check the significant risk items. But at the same time, I will also do a bottom-up approach by going to the end users and various stakeholders at the lowest level, talking to them, just inquiry, without doing any vouching, without doing any in-depth audit, without verifying any document. I will just only check with them what is their views in certain areas, what is happening in the business, are they aware of the procedures and how that is being followed. Somebody, disgruntled employees will always be there in every organization. He will say, sir, what you people are doing audit? You are checking only those items. These items never your assistant has come and see. Just go and check, sir. All the errors are happening only here. That bottom-up approach of having an inquiry will also help you to find out an error which will be much higher than your top risk items. So you have the unpredictability element in all the aspects, how you can map this and how your business objectives of the client has been aligned into that. Now, what we are talking about the internal audit aspiration. So one, we are now thinking that the internal audit should be process risk and control based approach rather than a simple transaction based approach. So I should look into various aspects of the process matters, and if there is any exceptions coming out of that, and that will help me to address the business risk based approach model. So that's a risk based approach, whatever you are calling. The second is periodic and audit plan based approach. I will also not stop at that level. I will also have something which I will do where I will have an audit plan. That audit plan may be used for doing certain things, and that will help you to assess the real time and the business cycle based approach. So this is what I said, using the computer aided audit techniques. Sitting somewhere, I can actually see whether this is being done or not being done. I can closely monitor that. And then we are looking at enhancing the control focus. If the controls have been properly built in, and I think that that can actually help you in doing it. In other words, if you look into the entire aspects of this game, what we are trying to achieve? We are trying to achieve a complete balance between what is the logical way in which an audit should be done, and also to address the legal related matter. Because if you are only concentrating on logical matters, you will miss on legal matters. If you are only concentrating on legal matters, you will miss on logical matters. So whenever I am talking about legal or logical, something comes to my mind. There was